Good evening, investors. It's another time to actually speak to everyone today. We have another special edition today that we are going to be doing. So, today, the 8th of January 2025, another trading day on Wall Street. The market will be closing earlier today to actually mourn the former president that passed on earlier last week, Jimmy Carter. May so rest in peace. So before I get into this special edition, please any of the stocks, any of the picks that we do here, any recommendation is for education and information purpose only. So consult your financial advisor or do your due diligence before making any decision. So today is a special edition, like I said, the 2025 top mega stocks. That's what we'll be looking at. But before we actually get into that, we're just going to bring you up to speed with what is happening on Wall Street today. So let's jump right in. If you haven't subscribe to this channel, please subscribe, put on the notification bell, and so that you don't miss any update that we'll be sharing. We love all your support, all your following, all your shares, all your likes. So please continue to support us by subscribing and sharing this video. Let's jump right in today. So, BlackBerry, one of the most underrated companies, it was a company that was doing very, very well. Came up with the BlackBerry smartphone before iPhone even became very strong. Before Android, the Google Android, the likes of Samsung became huge globally. BlackBerry was there, but the company actually had a division that was into cybersecurity. So after BlackBerry devices actually went down in market share globally, the company's cybersecurity division continues to operate, and the stock has really been performing. Yes, the stock has crashed to almost all-time low, but in the last 6 months, this stock has done about 68% because they had a recent collaboration with the likes of Microsoft. So there might actually be the feelings that is Microsoft looking to acquire this company on the cybersecurity side of things. It's yet to be seen. Keep an eye on BlackBerry, ticker symbol BB. Today, Jensen Wang actually made a bold statement yesterday, but today the ripple effect is being felt across Wall Street. Quantum stocks, companies into quantum computing, actually most of them had their stocks crash by more than 50%, if just a little less than 50%. Why? Because Jensen Wang is actually respected globally, the CEO of NVIDIA. He actually made a bold statement and he said, the innovation in quantum computing, the industry, is not really going to yield anything. At least he said we still have about 15 years for this sector to really match up with what the semiconductor chips are actually doing when it comes to artificial intelligence, data analytics, and the entire AI ecosystem. A whole lot of quantum computing stocks are really, really crashing today, and it's a really, challenging day for this ecosystem. For instance, Ionic is down by about 42%. Some of them, like D-Wave, were actually down by about 50%. So if you are exposed to this sector, you might actually need to, rethink why you bought these stocks, why you're investing in this stock, in this ecosystem, in quantum computing, because this is a huge blow to this sector. And yes, the players in this sector have actually started hitting back, saying Jensen Wang, yes, is respected in AI semiconductor, is respected in the entire artificial intelligence ecosystem, but he actually got some things wrong. This is yet to be seen, so keep an eye on quantum computing ecosystem. So one of the news that just broke while we were preparing for today, Constellation Energy is going to actually acquire Calpine. The power giant will pay about 30 billion. It's actually a move to consolidate on that hunger for power, because AI needs a lot of energy. The AI data centers need a lot of energy to power these computers that actually carry all the AI workload, the AI training, the chips need a whole lot of energy. And yes, Constellation Energy went down by about 7% when the news broke. The stock is not necessarily going down because there's a problem. The stock is going down because this company is spending money. Will be spending about 30 billion to actually seal this deal. The major take out of this is that the US is actually racing to compete head to head and outpace China in becoming the AI global leader, because the AI development, training, the workload that these computers actually carry needs a lot of energy. And there's a whole lot of investment going into nuclear, going into even into geothermal and all that, just to make sure these power hungry computers are able to consume the energy they need. And quickly, HSBC is knocking AMD with another downgrade. They believe AMD doesn't necessarily have what it takes to compete in that ecosystem, especially in the semiconductor ecosystem. AMD used to be very big when the AI move, the AI hype wasn't necessarily this huge, but since the later to the half of last year till now, AMD has been on a downward trend, about 31% in the last 6 months, and they are actually cutting the price target. I actually believe this company might actually have a turnaround, or this company might actually be up for grabs, because if this company continues to lose the value that it has built over time, it might actually be thinking of maybe consolidation or a merger or so. That is just my own speculation. There's nothing backing this, but on Wall Street, nothing is impossible. Surprise and change is the only thing that is constant. Finally, the winner for today, eBay is a winner for today. A round of applause for eBay. Not necessarily that eBay has done something extraordinary, but eBay kept this business going despite the fact that they've been outpaced by Amazon. They've been outpaced by so many other big brands in the e-commerce ecosystem. But eBay is having a deal with Meta, because Meta wants to actually test the eBay marketplace on their own Facebook marketplace. So what this means is that eBay's revenue, eBay's orders will actually increase if this test should be moved to the next level. So just imagine if Facebook says they are going to actually overhaul the Facebook marketplace and eBay will be the partner. That is going to be huge. And on a more speculative side of things, which is not also backed up by any fact, but on Wall Street, nothing is impossible. eBay, perhaps, maybe acquired by Meta. Nothing is impossible. Regulatory-wise, this might actually meet a lot of pushbacks, but nothing is impossible, especially with the change of government in the US. You can see eBay up about 99.55% today. Now, coming to the reason why we are here today. So this year, we believe investors should be very, very diverse in the way you build your portfolio. Because if you are trying to build a portfolio, you don't just look at companies, stocks that will actually surprise. Perhaps some companies that can do 100%, that can do 500, 200, 250% when there's a huge catalyst, when there's an acquisition, when there's a merger, when there's a huge deal. You could perhaps, and very, very key, you should also be looking at companies who have over time outperformed, and they've delivered. These companies, we call them mega stocks, mega cap companies. Mega cap companies are companies, with value of over 200 billion in market capitalization. Why? Because these companies will actually build a portfolio for you over time. They have that history of not just paying dividends, they have the history of doing buybacks. Buybacks is when these companies actually buy shares from you and that actually increase the value of the stocks you own. The advantage of buybacks is that it also reduces the tax you pay as an investor. So instead of just paying you dividends that you get taxed, when you are actually collecting the dividends, they buy back the stocks from you, thereby increasing the value of the stocks you own. And at the end of the day, you actually get more than you put in over time. So the argument, before we get into these picks, the argument for some younger investors might be, oh, these companies have already had their run, and so investing in them might not matter. But come to think of it, one of the picks in this list has done about 250% in the last 5 years. And this company has been in operation since the last 25 to 30 years. So just think about that. This company has done over 250% in the last 5 years. So if you had bought this stock, you will have been up by 250%. So let's jump right in. If you are building your portfolio, for us, 2025, these are the top mega stocks to own. Of course, this is part one, and we are going to actually be bringing you part two in the course of the week. Number one is Berkshire Hathaway, undisputed biggest company when it comes to investing in companies that nobody believed in. Warren Buffett, the most respected investor on Wall Street, what he does and what he had done in the past was to look at companies that were undervalued, companies that had a very good team, a very solid plan, a very solid team. And he had built this company, and that is why today the number one company on this list is Berkshire Hathaway. If you look at the last over the years that this company has been listed, over 1,779% all-time delivery. The company, the stock has low volatility, low beta, so you don't necessarily have to worry much. The company has a huge cash reserve, over 300 billion in cash. It's more or less like an ETF of sort, but it's just good for any low-risk investor. So if you're looking for low-risk exposure to the stock market without buying an ETF, Berkshire Hathaway is actually the stock to own this year. Number two is actually a banking giant, JP Morgan, with the ticker symbol JPM. Over the years, JP Morgan is just the juggernaut of the banking ecosystem. The financial crisis that happened in 2007, 2008, JP Morgan survived unscathed. JP Morgan came out of that crisis bigger, bolder, and better. His CEO is more or less like the boss of all bankers globally. The company, the bank moves more funds across the world than any other bank. Low volatility, better returns. Over the years, 1,985%. You can't beat that. One of the most respected company on Wall Street. And if you're looking at a bank to own this year, JP Morgan is it. Walmart, yes. Walmart is the undisputed king of groceries. This company measures the cost of living and the health of the typical American consumer. Walmart is now a global grocery giant. They operate across the world now, in India, apart from the US, in part of Africa, through some of the deals they've done, merging and acquiring shares in some of the biggest retailers in Africa. So if you look at the solid dividends that this company deliver with the capital return on capital to shareholders, Walmart is actually the stock to own. I personally believe that Walmart will be the first grocery company to become a $1 trillion market cap company. Why? Because if you look at what this company has done, they've been able to remain firm and strong, despite the fact that e-commerce became the big thing. Amazon became the biggest thing that ever happened to selling online, to selling even generally, but Walmart still remains very strong. Over the years, 21,685% return. How can you beat that? So if you're looking for any stock to own, any mega stock to own this year, Walmart should be on top of your list. Number 4, I'm sure you must have expected this, but we are bringing this to you on number 4. Apple. Apple is actually the bellwether of the global, tech ecosystem. The unmatched brand value of Apple is undisputed. The network effect, the global market and marketing distribution of Apple is amazing, unmatched. Innovation-wise, yes, this company might have stumbled, on recently, but if you look at the value this company has actually accumulated in the last 5-6 years, it is very, very amazing. And this was the stock I was talking about when I said one of the peaks has done about 250% in the last 5 years. It's actually Apple. But if you look at all-time delivery and return on capital to shareholders, Apple has delivered 186,184%. This is amazing. Not just amazing, it's just unbelievable that a company can amass and return this to shareholders. The company has huge cash reserves. This is a major strength because whichever ecosystem or outlook or weather or environment Apple finds itself, this company will actually have much more cash to innovate, to actually cash up with anyone that is actually threatening its position. You've seen it with the Apple Intelligence. Despite the fact that Apple has not rolled out, fully globally, Apple, I believe, is going to be the one to actually make more money from AI, even more than anybody you can think. So Apple on number 4. Number 5 is coming to you, and it is Netflix. Gadam! And I know you actually, you recognize that soundbite. So it's the Netflix. There's nothing more to say. To just say this company has just delivered when nobody believed that people will now prefer to watch content, films, blockbusters, TV shows, sporting events, wrestling matches online. Netflix is now the undisputed winner of the streaming and entertainment business. And this company has what it takes to actually upstage any TV networks in the world. If you look at the deals that Netflix has been doing in the past 3 years, you could actually see that Netflix might actually become the de facto TV or the de facto video content whenever you want to watch anything on a TV or on any smart devices. And the cash reserves that this company has actually allows it to do more deals than any other person. If you look at the WWE deal, if you look at the boxing matches, if you look at any of the content that people now watch, Netflix is now grabbing everything. And look at the return on investment to shareholders, over 72,000% since Netflix has actually been listed. Finally, and on number 6 for this part 1 of the episode is Amazon. Amazon actually created and oiled the e-commerce ecosystem that we have today. Apart from what you have in China, Amazon has now dominated the global e-commerce. Forget the fact that you've heard about Temu. Forget the fact that you've heard about any other one, that are trying to actually eat into Amazon's market share. Amazon is not just an e-commerce giant, it's a tech giant in its own right. The cloud computing ecosystem is now dominated by Amazon with the AWS cloud platform. So if you also look at the AI side of things, Amazon has what it takes to become the processor and the hosting platform for the artificial intelligence ecosystem. Amazon continues to invest in that ecosystem. Over 246,000% return. Nothing beats that. Years of solid returns, shareholder value delivered. This is where we end it today. We believe these picks might not necessarily uh, you know, be exhaustive. This is part one. We are bringing you part two unfailingly tomorrow, where you will actually be seeing the juggernauts and some of the companies that you love to own. Like I said, these companies might have a huge run in the last 20, 15, 30 years. But if you look at the last 1 year, the last 3 years, the last 5 years, the last 7 years, 10, 15 backwards, they continue to deliver. And with the way the global economy is, these companies will continue to deliver. If you have watched us so far, please continue to subscribe to our channel, share this video, and we love every feedback that you share, whether the one you share privately or the one you actually share on these videos. So we want to hear from you. What are your big mega stock company that you are looking to own this year? We would love to hear from you. On that note, we'll end it today. Thank you so much for being part of the edition for today. We will see you tomorrow when the market comes back. The market is actually on a downward trend, but it is understandable because of the fear of inflation, the inauguration that is coming up, the new government. I actually believe with the inauguration coming up, the market will actually rebalance and we'll see an uptake again. But this is actually the best time to buy any stock that you are looking at. So if you look at any of these picks now, this might actually be the best time to have an entry into them. Thank you so much for watching. We'll see you tomorrow. Keep investing, keep growing.